Just don't do it. You heard me right. The golden rule for you if trading isn't your day job, just don't do it. You might have heard stories about someone's friend making big bucks in the stock market. Ever wonder why it's always someone's friend and hardly anyone you personally know? Because the reality is quite different. Let's look at the facts. Studies show that individual investors who actively trade face significant drawback. By most anecdotal accounts, it is believed that approximately 95% of day traders end up losing money, and empirical evidence support the persistence of this high percentage of unprofitable day trader even in the face of financial losses. According to a study by researchers at the High School of Berkeley, out of over 66,000 households, those trading the most earned an annual return of 11.4%, while the market returned 17.9%. Another research paper called Just How Much Do Individual Investors Lose by Trading looked at retail trader return data from Taiwan, and it says individual investor trading results in systematic and economically large losses. Using a complete trading history of all investors in Taiwan, we document that the aggregate portfolio of individuals suffers an annual performance penalty of 3.8 percentage point. The impact of trading goes beyond just losing money. It can significantly affect your wealth over time. A 2% annual return shortfall compared to the index can result in 45% reduction in potential wealth over 20 years period. Now, if you think trading is just a bit of harmless fun, think again. The evidence against it is strong. If retail traders were truly succeeding, trading platforms would proudly display their lifetime portfolio returns. Yet none of them do. Brokerages also avoid publishing data on how well their customers perform because, truthfully, it's not in their best interest. And let's not forget about taxes. In India, where 15% tax applies to short-term gains and 10% to long-term gains for equity, your trading strategy return will take an additional hit of 1 to 1.5% annually. So when you consider India's tax regime, the real return shortfall compared to a simple index buy and hold strategy is closer to 3 to 5%. In fact, take a look at this chart. Every trader begins with a dream of quick riches, but the reality is tough. Nearly 40% throw in the towel within a month. 80% of day traders quit within 2 years. Just 7% remain active after 5 years. Why? Just one reason: losses. What's more, only 1% make profit after fees. In conclusion, all the data points to one thing: the average retail trader loses out money by actively trading. So be smart, be a contrarian, and don't trade.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing. For more information, visit kuvera.in.